In this video, I want to talk about what a journal entry is. I think this is one of the most important things to understand in all of accounting. What is a journal entry? I consider a journal entry a translation. We are taking a statement, which we call a transaction, and we are writing it in accounting language. Okay, so if you watched any of my other content, I always say that accounting is the language of business, and this is the heart of the language. And so if you can master these journal entries, you can do pretty much anything, okay? So let's write one, okay? I think that's probably the easiest way to figure this out. So let's say here, I'm going to scribble some notes down here on one, let's see, on 1-3, company buys, let's say, paper for $25. Uses credit card. Okay. We see stuff like this all the time, right? Okay. I mean, this might be something like you might buy paper, right? For $25 and use your credit card. Okay. So we need to take this and we need to put this in accounting language. So the first thing I'm going to do is I'm going to write in the date since I've got that. So on 1/3 is my date. Okay. So the company buys, okay, we're buying paper, $25. And how do we pay? We use a credit card. Okay. So whenever you have a transaction, there has to be a give and a take, right? Okay. When you learned with the accounting equation that the accounting equation always has to stay in balance. And in journal entries, we have these things called debits and credits. A debit is just, you can think of it as the left side, and a credit is the right side. There are a couple accounts that increase with debits. There are a couple accounts that increase with credits. Debits, okay, increase assets and increase expenses. Credits increase liabilities, equity, and revenue, okay? So I'm just going to put up here on top, I'm going to say plus assets plus expenses. Okay, just so I kind of have that as a reference. And then for this, I'm going to put plus liabilities plus equity plus revenue. Okay. And then the opposite is true. So if I want a liability to go down, that's a debit. If I want equity to go down, that's a debit. If I want revenue to go down, that's a debit. Okay, so this is pretty helpful, you know, so you've got a little guide here to go by. Okay, so the company buys paper. Okay, so what is paper? Well, that's a whole bunch of paper. I mean, I know with my firm, if I buy that much paper, we're a paperless office, so that's going to last me a long time. You kind of have to look at what your book wants you to do here, okay? So some books are going to say that paper is an asset because you haven't used it yet. Some books are going to say this is supplies expense because we're going to use it up really quickly. Okay, so go back to what your book says to do with this. So I'm gonna put it to office expense because that's what most of your books are gonna do. Let's see. If it's a small amount like this, office expense. Okay, that's my paper. Okay, and if you want, like, you could write like a little note, like. In reality, what we would do is we would probably put a little note that says like, hey, we bought paper. Okay. And then I'm using our credit card. Okay. So I'm going to put down here credit card. Okay. And you might, in reality, we would probably have like credit card, maybe it was the Amex, the American Express. Okay. Whatever credit card it was. I mean, the thing is, when you're doing this in reality, the more detail you have, especially when it comes to bank accounts and credit card accounts, the better. All right, so I might actually call this American Express instead of credit card, but for now we want to identify that it's a credit card. Okay, so if we think about credit cards, what type of account is this? This would be a liability, right? Because I am incurring debt in order to make this happen. So I'm just going to put a note that I know that this is a liability. Okay. Here's the thing. When you're doing this in reality, you're not going to make all these notes. You're not going to do all this stuff. This is to help you as you're learning. And what I typically tell students is that when they get to the points that journal entries click, right? And what I mean by that is when you no longer need all of these notes, all of these triggers, you don't need to put the assets and expenses up here anymore. You don't need to put these notes. You just know, right? And at some point, this usually happens in the first 6 weeks of the class, everything clicks and you don't have to do this anymore. Okay. Until that happens, make all the notes. Okay. Do what I'm doing. Okay. So I'm buying paper, which we're calling office expense. I put on a credit card. That's a liability. And we spent $25. So my amount is going to be $25 in both columns. I need a debit and a credit to offset. Okay. So since that's the case, I need to figure out which one is my debit. Okay. Now I know that if assets or expenses increase, that's a debit. So looking at my expense, I have office expense, okay? 99.9% of the time when you see the word expense, it's going to be an expense. The only exception to that that I see on a regular basis is prepaid expenses. So clearly I think we can say that this is an expense. Okay, I use EX for expense and EQ for equity. So this is an expense. Now I need to determine, is my expense increasing or decreasing? Well, if I had not spent any money on office expenses this year and I spent $25 to buy paper, my expense went up, right? So I'm going to put a little plus here, okay? Expense plus. So expense went up. So the expense is my debit, okay? Now let's make sure that this is correct, because a lot of people just run over and go, oh, credit, okay, cool, done. All right. We just said our credit card is a liability, okay? So this is an L. And is the balance on my credit card going up or going down? What happens when you charge something on your credit card? The balance goes up, okay? So L plus, all right? So my liability is going up. We said when liabilities go up, that is a credit. And so $25 here. Okay. So that is a transaction. All right. Okay. So I'm back. I finished erasing that one and I wrote in another transaction. I know you guys hate it when I spend too much time writing, so I'm trying to get better at that. All right. So on 1/5, I finished a project for a client and I billed $2,300. So, all right, so we're gonna do the same thing we did last time. We're gonna put down our date. Let's see. All right, and then we've got to figure out our accounts first. So what does that mean if I finished a project for a client? So when I think clients, I think these are people I do work for. So if I finished a project for a client means work, right? I did work for a client and I billed that client $2,300. Okay. So I've got to think to myself, all right, what are we doing here? Okay. So billed, who did I bill? I billed a client. All right. So you've got to think, this is where knowing the terminology is like critically important, because if you don't know what the accounts are, then this is impossible, right? None of this is going to be anywhere remotely easy. So if I finished a project for a client, I did work for a client, and I billed that client $2,300. Well, if I bill a client, and I have not gotten paid, then that is accounts receivable. Okay, and how do I know that? Because accounts receivable, make sure that O shows up there. Accounts receivable is amounts that my clients owe me. Okay, accounts receivable. Let me get my eraser there. There we go, much better. Okay, so accounts receivable, and then I have accounts receivable because I did work for a client, so I want some sort of like revenue account. Okay, so we could call this fees earned, we could call this sales. I mean, you call it whatever you want. So I'm going to call this sales. Okay, because I sold my work, right? That's sales. Okay. All right. So now let's think about, and I know, a lot of your books, they kind of indent, the credit, and they want you to figure out the debit and credit before you write anything down. If your professor is picky about that, then do it. When I look at accounting software, it does not indent the second line. Not when I'm writing them. Okay. And even when I look at the reports, like if I look at reports in QuickBooks, it's not indenting the second line. Okay. So, all right. So now let's analyze these and figure out what we're going to do with them. So accounts receivable, I'm receiving something that is an asset. Okay. So I'm just going to put over here that I have an asset, and then sales, sales is a revenue account, right? Because I earned revenue. Now, is my asset increasing or decreasing? So if I bill a client $2,300, I have the right to receive that $2,300, right? So if the client owed me nothing and then I billed the client $2,300, the client now has a balance of $2,300. The balance is increasing. If I'm doing work for a client, if I had no sales and then I billed this client, I now have sales. So my balance on the revenue is also going up. Okay, so accounts receivable, asset increasing. So we said when an asset increases, right, then that is a debit. So I'm going to debit this $2,300. And then, and I'll be consistent here, I'll put in my zeros. And my sales, if my revenue increases, well, if I look at this assets, no, okay, revenue's over here, revenue's increasing. So that is also $2,300. Okay, so there's my entry. My entry balances, I've got a debit and a credit, and life is happy. Okay, this is the basics of how to write a journal entry. Now, I could have lots of, I could have journal entries with 50 lines. And as long as my debits and credits balance at the end, I'm good. Okay, so it doesn't have to be 2 lines. It has to be at least 2 lines. But they have to balance. Debits and credits have to balance when you're done. Okay? You can never, and this is one thing I tell my students, you can never, ever, ever, ever have a journal entry with 1 line. Because then it can't balance. Okay? So it's funny because I tell my students, I'm like, promise me, you are never, ever, ever going to write a journal entry that only has 1 line. Okay? You don't want to make that mistake. Every individual entry has to balance out. So when you're doing these, whether it's on homework or you're just practicing or you're doing an exam, treat each journal entry as if it's a separate problem, right? And every single one has to be complete. All right, so let me know if you have any questions about this, and I will see you soon. Thanks.